Hey there, I want to get this video out. I've had a lot of emails asking when the Ultimate Swing Trader is going to be re-released to the public. And on Wednesday, July 28th from 12 p.m. to 1 p.m. Eastern Time, that's going to be New York time, it's going to be a free live webinar for you to come attend and see the Ultimate Swing Trader in action. And it's actually the first time this has ever been offered. It's the VIP access. And I'll get to that, what that's all about more in a minute, but I got to tell you, it's never happened before. Netpix has never offered something like this, and I got to tell you, it's going to be fantastic when we get to it. Here's the link right there, the www.atradingplan.com/ultimate swing trader. You can head over to this link right there, put your email in, and you'll be notified all about the details coming up for this this webinar. And before you do that, let's take a look at some charts. Then we'll look at some blog highlights, and then we'll get you over here to get your email address in so you can attend this webinar. Okay, I'm going to start off with the Euro Yen. The Euro Yen is one of my favorite pairs to trade, both day trading and swing trading. That and the Pound US, two of my favorite pairs to trade. And first, let's take a quick look at what we're looking at here. This is what we call our directional. This is our trend band. What's going to happen here is when this directional comes out, our calculator is going to set us up profit targets and our stop placements and our entries, all geared to how the market is, the market volatility. All right, so that's something that's really, really key, so not every trade is going to be the exact same. And obviously, that doesn't make any sense anyhow if it was. Market volatility is going to play a huge part in your targets. Your stop is going to be how much you're going to be risking. All right, let's just take a quick look. We're going to start, just do the last couple of days of last week. Last week was kind of a weird week for trading. We did have the stress tests that were coming out. Let's just see how we did here. This is the Euro Yen. Here's a setup right here. Now what we like to do here is enter a trade with multiple positions. And at our first targets, which are all printed out on the screen here, that's these red dots that you're seeing. These are scale out points. So you scale out a portion of your position here. Let's say you're trading 8 mini lots. And then right here, so you would close 4 here. You ride your other 4 down to here. But what we like to do as well, when we get to our first target, we move our stop to break even. So what that's going to do is it's going to give us a free run to bank some more profit in these trades. But this one here, this is what happens on this trade. It gets to a plus 31. Our stop goes to break even. You can see what happened here. It comes back around. It just ticks you out before going on to full target. That happens. If you've been trading, anyone that's been trading here for a while knows, we see that quite a bit. Market ticks you in, ticks you out. That's how it goes. This trade does go on to full target though. We're going to see here, and actually this trade is going to go on further down in this chart. Once I start scaling down here, it's going to be getting to a different trade. What happens here? Here's our entry price. See, it's plotted out for you. You want to make sure you're adjusting around these current swings, which there really isn't, right? You don't be searching back a month, but anything in the recent area. And what's going to happen here is the market does get down to this level here, about 110.90-ish, and then comes back out. So what's going to happen is you're going to be in this trade here. You're going to be underwater right away. If you get, well, not really, you get triggered in. Well, who knows what's going to happen here, right? But you get triggered in here for sure. But see, our stop's way up here. It's way out, and we don't just take our stop blindly. If there's a key level, we're going to adjust around. If there's a swing level, we're going to adjust around, right? So what happens here? We actually don't get triggered in this trade till over here, right? Because our entry price on this is at 1163. See, it's up here in the data window. Well, this candle comes down. This is where our setup candle is right here. When this closes, we get the setup. We don't get in this trade until right here, the low of 61. So we're in this trade. So what's going to happen is it comes out, takes you out for plus 73 on the first portion of your trade, comes back out, takes you out for a break even. I can live with break evens. Let's look around here. We're going to get a plus 48. Here's our entry way up here, right? 1136. Get plus 48. Stop comes up to break even. See what happens here. Plus 98 is our ultimate target. Get ticked out right here on this target. Plus 98. Perfect trade. Come back around with a long. See what's great? You're going both short and long depending on what the market's doing. And now we're getting to a confirmed trend. Now trends don't always work out. We all know that, right? But we put the odds in our favor. We get into this trade. Here's our setup. Into our trade here. Our stop's down here. We get challenged here. We don't get taken out. Take plus 50. Stop goes to break even. Rest of trades a free ride up to 100 extra pips. And what's that mean? It means that trade's done for 150 total pips. Now you can do the math here. let's just say you're trading two minis, right? That's $50 plus $100 because you scaled out, right? It's $150 trade right there. And then we come into this trade right here. And this is where it gets kind of choppy. But what's going to be good is this chop happens really, really quickly. So these trades all work out the exact same way. What happens here? You get triggered into this trade right here. This is our first target. Comes out for plus 46. Comes out, takes us out for a 0. And then what's going to happen is this. No trigger on this trade right here. Comes back out. This is Friday. All right. This is Friday at 2:11, 3 p.m. Who wants to take a trade over the weekend? Plus 442 pips in just a few days on the euro yen. Not bad. Let's take a look at the pound US. Well, what goes up must come down, right? Here's our pound US trade. In this trade, definitely here, right? Comes back out, takes you out. The spike down right here. Quick loss for a minus 50. Let's keep going. We're going to make that back with this trade. As you know, entry price, stops, targets, not just blind, right? We're going to make these smart adjustments, these key level adjustments. This stop is at 52.64. We have a swing level right here. It's going to cost you an extra, but that's like car insurance, right? You don't like paying for it until you really need it. So this trade would give you a little bit of heat, almost ticked you out here, but doesn't break above here. You're going to be wish you paid that insurance. Plus 45 on your first position, out at plus 90. This is great because it just ticks you out of this trade right there. That's what I like to see. Keep going here. A long setup. And here we go. See, here's the stop. Remember I said market volatility. Here's a stop. Gets challenged. Doesn't get you taken out. How's this trade going to work out? It's going to give you a plus 75. Let's just mark this so you can actually see it. We'll just take a quick look here. Mark out this plus 75 and then plus 47. Let's mark that off as well. So take a quick look at that. Right? Boom. There's your plus, what would we say? It's plus 75 and then 147. All right. So let's see. Plus 307 pips on the pound US. So just do the math here. It's over 700 pips just this week. In like 3 or 4 days of trading two pairs. These are 610 tick charts, okay? So you're not babysitting these trades like you do your day trading. This is 2 pair. One pair that's out there that's a beast to trade at times, the pound yen. Not my favorite pair to trade, but let's take a quick look how that paid out. Well, your first trade is going to be a minus 38. Now, the entry price on this trade is 132.67. There's a low swing right here, right? You can't miss this. This low was at 65. Do you adjust around? But you know what? I'm not going to nickel and dime. We're going to take our loss. Maybe you adjust it down. The entry price, like I said, was 67. Here's 65. Maybe you go 2 pips below that, 64, 63, maybe down to 60. Here's the low, 56. So it doesn't really matter. You would have been taken into this trade. Quick out. Let's see here. The stop on this is 05. So we're already above the key level of 133. There's a swing up here, 27. This is 27 pips of insurance you're going to pay for a profit target of 78. Are you going to pay that much? No. Take our loss. Let's move on. Take our minus 38. And then, of course, look what happens. It comes down and it just keeps going. But here's what's great. We do get times, I'm not going to cover in this video, it gets covered in the training quite well, where you can actually get back in. You see what happens here? It bounces off this directional, gets back in, and this is your shorting area right around here. Basically the same parameters of this trade. So if you would have gone and taken these optional re-entries, this is going to be a nice trade for you. Well, we're not going to cover that. Plus 67, plus 134 in this trade, right? Same thing. We talked about key level adjustments. The stop is at 132.05. You can go 132.05, or you're going to pay that 6-7 pips for 134 pip potential. Yeah, I think you would. All right, plus 67 here, right there, and then we're going to go to break even